Hey guys, welcome back to the channel. I hope everyone is doing great. There's some more good news lately, so let's get into it. So first, well, CM Punk came back to WWE, so I don't know if you guys follow wrestling or not, but that's some shocking news. But anyway, so Defiance, they recently had this document that I was looking through. So it looks like there's two new uh, weekly ETFs, weekly option ETFs that are coming out. Because lately, so far, Defiance, they only have JEPI, Triple QY, and IWMY. So those are US only zero day TTF, zero DTE ETFs, but things are about to change. So obviously, this is not final. So I don't know exactly when they'll put these two out. So according to like this document, the ticker symbol should be EEMY and EFAY. And it says so subject to completion. So this is filed November 20th. So assuming that if this is submitted to the SEC, maybe plus 75 days. That might mean maybe late February, early March at the earliest. But anyway, well, let's just get into it. So right off the bat, I like how this is set up to generate monthly income. So I'm guessing this will, if it's gonna follow the triple QY, it'll probably pay like the payable date will probably be closer to like the beginning of the month. So according to like the methodology, they should be using at the money or in the money puts. So it's saying a range of 0 to 10% in the money. So they have some discretion there. Uh, and the reason why I said it was probably weekly because like according to like this part over here, the principal holding, the expected target maturity. So they're saying typically 1 week, which makes sense if they're going to use the EEM and the EFA ETFs to sell covered calls, or actually in the money puts in this case. So my guess is that it was going to come out in 2024, assuming that they filed in November. Because also over here it says since its inception in 2024. So again, if these names look familiar, so that's a good thing. So Jay has been and his team has been, I guess, like putting in a lot of work behind the scenes. So let's take a look at like some potential estimated yields. So for EM, if they're using more at the money options, I'm thinking like the yield will probably be closer to 29%. But depending on how far they go in the money, it could go as high as 96%. And I've got and of course like all of these are just projections, because like I don't expect them to hit it out of the park every single week. That's not realistic. But it's just like kind of like a ballpark number to kind of think about. If it winds up like somewhere being in the middle, like I'd still be really happy because that would still be within the ballpark of what the triple QY or maybe a little bit less of how they're doing. Like, even at 40-50%, I would still be like really happy. And then also for EFA, uh, the at the money is around 33%. And it's interesting how for the in the money, uh, it'll come out to about 66%. But of course, like this depends on like the pricing because it's going to change every day. So this is just like some numbers to throw out there. Again, if it comes out like somewhere in the middle, I'd still be really happy. So and also some additional uh, zero DTE related news. Um, so so it's been about a year since like the SIBO launched zero day options. So I think that's fantastic. I think these new products are just like providing like so much opportunity for people, especially if they like to trade and invest. And then just to kind of follow up on that, Nasdaq also lists zero DTE options. So there's like five ticker symbols that they've started with. So so far they are GLD, SLV, TLT, UNG and USO. So I'm hoping like they'll this is like a sign of things to come, and that we'll have more zero DTE like on different like broad-based like ETFs, especially like some because some of these most of these are actually commodity based. So I'm wondering if they have like something else in mind, like maybe like other international or maybe other commodities. I think like this is a good way to start off. And of course, like I'm pretty sure like the Defiance team, well, it's actually probably Jay from Seiko Financial, that they're probably looking at this like, maybe there's like more money to be made with a new yield um, on these ETFs. So again, these are just like theoretical projections that I'm going to show you guys. Um, these could potentially be even more insane. Uh, so even like if my numbers are like half right, like we're still looking at some pretty good potential yield. But again, like I just want to just let you guys know that these are just projections on my part, and and these are pretty it assumes a lot. Like it assumes that you're that you're really hitting out of the park every day. And of course, that's probably not going to happen in real life. But it's just like just to show you the power of these things. So for GLD, like if they're selling premium and they're able to capture a good part of it every day, we're looking at the money for at around like 42%, and if they do in the money, probably closer to 200% even. But again, these are just like projections, so keep that in mind. And then for SLV, it gets even more nuts. Um, like at the money would be around like 520%. In the money is like 1500%. I mean, it's just nuts to kind of think about. Um, and then for TLTY, uh, well, I'm sorry about that. Like TLTY is just my guess of what Defiance would use as like their ticker symbol. Like I'm just like guessing of what they're gonna use. If they if they decide to go this route, and I'm pretty sure like some of these will get looked at. So for TLT, this will be pretty awesome because this would handily beat like the TLTW that's out there now. So at the money, like this is like 80%. In the money, you get potentially 230% plus. And then the last two, I'm gonna put an asterisk on these two because when I ran the numbers, like I had to check them like a few times because like this is insane, like almost 1,000% for at the money, and then in the money it's over 5,000%, which is completely nuts. Um, but as when things are too good to be true, there's a catch somewhere, and I'll show you in a little bit. So, and then for USO, like well, first, like this is based on oil's futures contracts. So, and they've been kind of volatile lately. So that's why that's probably part of the reason why some of these are just like ridiculously high yields potentially. So like the yield in this one would be know, over 350%. And then like if you go in the money, you could potentially get 570%. But again, there is a catch. So, and I'll show you in a second. Um, if you want to talk nav erosion, this is probably like the poster child for erosion. This is on the UNG ticker. So what this is what this is basically a like an ETF for, but they're not actually buying like natural gas because it probably doesn't make sense for them to kind of hold like have a way for them to hold natural gas. So they're using futures contracts. So like one of the problems with futures contracts is that like certain commodities they could be subject to backwardation. So that means like for those of you that don't know, futures contracts have like different expiration cycles, usually around every 3 months or so. So there's something called front month and then back month. So like for example, if like the front month will be February and then the back month will be March. If the price in March is lower, then that means like that's subject to backwardation. And there's plenty of other channels that cover the specific topic. There's also plenty of reading material if you want to go into that. So if you're a fund that's forced to kind of buy this like every month and there's backwardation, basically you keep like you're kind of like have a like a built-in loss, and that's why like over the years, because this fund has been around for like a while. This is like a 20-year chart. What they had to do was because like to combat like the NAV erosion, what they had to do was they had to do a lot of like reverse stock splits, just to like try to keep the price at like a reasonable level. And this high number over here, like I don't think this actually hit like $2,000. This is like split adjusted. So this is like the number that you would see like if it had never gone through all those like stock splits. So again, it's this is more of like a kind of like a accounting magic trick just to make like the numbers look better because like I think the problem is like for certain like stocks and ETFs, like if they get below like a certain price, uh they might be forced to like delist or like they might have to go like what they call like pink sheet type of like over the counter uh like stocks. And most people like especially if they're trying to market this type of fund, it doesn't look good. So what they do is like they do reverse stock splits just to make the like the share price look better, just so they can kind of like keep customer money coming in, and that's usually for certain let's say like your hedge fund, and you see like the kind of like these crazy price drops. Uh, you're probably unlikely to kind of use these type of products, so that's why they sometimes like these like funds have to resort to like these accounting tricks. But anyway, that's like like a whole nother topic that most people have already covered. I think most of um, you guys probably already know this already, but there's always a catch somewhere. So, but even then, like even if you go back here, let's say you like they only capture like 10% of like these gains. That would still be pretty good. Um, but anyway, so I mean, what a time to be alive! Like, there's so many great funds that are potentially in the works, and that are coming soon. But it's I guess like still need other income-based investments. But like at the rate they're going, um, like we may even like in the future like have like a dividend aristocrat version of these guys. The volatility might not be there, so that's probably like the only thing that might be keeping them from like into getting into like the dividend aristocrats too, because especially if they're using option positions, like then you won't be getting the actual dividend, but you might get like some option premium from it. So guys, there's so much good stuff like coming. So and of course, like you have to go through like the risk too. So I expect like the expense ratios to kind of be in line. So we'll probably like 99 basis points. And then the usual like we don't get to choose which strikes. But the good thing about Defiance, they're pretty transparent, and they show you like the actual trades. So it's always fun to kind of like see how, like what the thought processes are. And then like they can't control like implied volatility. So hopefully like they'll be able to start working on like the SEC like documents and like maybe get the ball rolling. And of course, like like the prices can always go down, like kind of like what I showed you with UNG. And then the yields won't be consistent month to month. But I think like even if they fluctuate, they're still like within like a pretty healthy range, I would say. And I don't expect you can borrow against them anytime soon. So guys, like I'm really excited. Thank you for like all the new subscribers that have come in. Thank you for liking it and like sharing the content. Um, and there's probably more yield max gossip coming soon. So everybody, thank you so much for watching. And I'll see you in the next video. Have a great one.